Jason Schenker is with us now. He is president of Prestige Economics. He joins us from Austin, Texas. He is a Bloomberg best oil forecaster. Jason, thanks so much for being with us this morning. You put in your research that there are upside risks to the price of crude in the new year. So just how high and what are going to be driving the prices?
Well, for WTI, we see an average price for this year likely to be around $93 a barrel. Brent's going to be a little bit higher than that, closer to $94 a barrel. But in terms of how high we could get at any point in this year, very likely to see prices over $100 at some point. And if speculators pile on into this market and other markets look uncertain, you could see even our forecast seem a little bit low.
Jason, which factors are most important for the price of oil? I mean, if you can rank these at all, the gradually weakening dollar, sovereign debt concerns, concerns about inflation, how do these fit into the puzzle?
Sure. First and foremost, global macro growth. If you look at the IMF forecast, looking at global GDP to be about 4.2% this year. U.S. GDP is going to be shortly behind that. If you look, growth likely to be 2 to 2.5%. And then behind those things, you're going to see concerns about the dollar, a beginning of a longer-term trend for continued dollar depreciation over time, concern about inflation. And then another critical thing is going to be concern about other financial markets, sovereign debt, fixed income. There's still concerns around what debt is really worth. And if that's true, the commodity markets could remain really hot and a sure macro play for people. And that's what we're looking at in our forecast, and that's what's going to drive prices higher.
Jason, what role does China and other emerging markets play in your forecast?
Sure, that's critical. That's in that first part of looking at global GDP. That's going to be a major component driving growth this year. You're looking at GDP in 2011 being stronger than its previous peak in 2008, and that's going to have an impact pushing oil prices almost back to that 2008 level. The only thing holding us back from reaching those prices is the fact that there's still a little bit more of an inventory overhang and a little bit more spare production capacity.
So is oil finally going to then trade on, I don't know, supply and demand, the actual fundamentals, or is sentiment going to be more important?
Well, the truth is, whenever you have a market where you can trade in both the present and the future at the same time, there's a circuitous feedback loop where you're not only trading on what's actually going on right now, but what people think will happen in the future. And you can see that in the forward curves. Prices are going higher. I think if we look at 2012 and beyond, you're going to see prices averaging well above that $100 mark, and it's going to be new records going forward. But for 2011, the average price is likely to be a little bit below that 2008 level.
So, Jason, I mean, what does this mean for a group such as OPEC? I mean, we know that their next scheduled meeting isn't supposed to be until the summer. If prices are going to go up to $100 a barrel, do we move that up? Do we see them have some sort of emergency meeting in the spring?
Well, I think it's very likely they could have an extraordinary meeting at some point between now and June. They've allowed production creep to go up in terms of the quotas. They actually suspended back in October individual country quotas, allowing the demand side to pull more supply onto the market. If we look forward, they are going to raise their quota this year. There's no question of that. But if speculators begin to push this market higher as the bulls pile on, OPEC might have trouble, even with increased production, keeping prices at a level that's low enough for them to be happy.
Jason, thanks so much for the time this morning. Jason Schenker joining us from Austin, Texas. He is with Prestige Economics.